At this point, anyone who has been stacking or hodling is on top of the world.
Oh, absolutely. And MicroStrategy was a first mover in terms of adding Bitcoin to their balance sheet, and that's why this national crypto stockpile is so compelling. So essentially, the U.S. government has $16 billion worth of Bitcoin already on its balance sheet that it has amassed through these seizure operations. But what Donald Trump is talking about doing is not only holding on to that, but he's also been talking to Senator Lummis and her team, who put forth legislation to buy 1 million Bitcoin over the course of 5 years, so that ultimately you get a supply of Bitcoin held by the U.S. government that is, tantamount to what we have in gold reserves, gold reserves, gold reserves, gold reserves.
It's not your fault. Don't fuck. It's not your fault.
Well, you fucked up, all right? So what? So everybody does it. Get on with your life, would you?
What life? I got no life! I'm in the dark here!
So it's that time to catch up on the Bitcoin cycle and see where we're at. So, looking at the Tritch Matrix 2026, we're here.
Look at that, 2023. Okay, 2023. So this is the time to start accumulating and then coming back up to 2026 where we want to start to sell out, go back in and so on. So
we've managed to come out of Q4 2025, and as we thought, it got front run. So we're going to have a look at the macro cycles. We're going to go over a couple of charts and see where we're at for the coming future. So first we're going to start with the power law. As you can see, we have basically stuck to this midline here. Since the halving at around 60k, we've just followed this trajectory of the midline, and we haven't had any blow off tops into this upper area. Now, knowing Wall Street and the institutions, they're going to suppress and basically steal that upside, and this is pretty much what we've seen now. So looking down here at the oscillator, which is just a kind of oscillation display of these lower and upper bands, you can see we've come down here into it, and this is why the bars are a certain colour. When the oscillator moves into these lower areas, you can see the bar colouring, and then when we move into the upper band, you can see the bars colouring here to signal a potential top. So everybody's been kind of running off models. You got the stock to flow, power law, all the different ones, and they keep breaking. So I'm just going to show you my simple approach, which I've been using for a couple of cycles now, but as the cycles come, we get a more validated model. So we're going to start with this one from 2023 January. This was basically the Bitcoin bottom, and if you notice this oscillator at the bottom, the Overwatch, you can see this trend switching up and down, and here's where it's switched up. So we know from looking back, this was actually the bottom. So then we fast forward to 2024 June, and this is kind of the first Bitcoin blueprint that I put together, and you can see the different stats. So I'll just quickly run through them. We've got all-time high to all-time high 4 years, okay, all-time high to all-time high 4 years. This is projected for here, which we was looking at Q4 2025 or early 2026 for the high. We've got the all-time high to the all-time low here for 1 year, same and same. So when we press play on this, we can see this play out and pretty much bang to the dollar, apart from this small gap up here, which is the gap from 125 or 26k to 170k, which I projected here. Now, I did update this. So here you can see I've got the updated power law with some more kind of overinflated targets, as you can see here, 300k. But You know, this is just an updated one with an extra cycle showing 1 million for forecasted power law, but you know, as this power law hasn't kind of played out this cycle, this is kind of irrelevant from where I'm standing. So coming back to the simple measurement of time-based cycles, we can see in months for this chart, and I'm going to break it down into weeks, that the all-time high from 2017 to the all-time high for 2021 is exactly 47 months. Okay, now I've took these two highs to measure 40 months from the high to this high, and then there's an extra 7 months for the sweep. Now, as you can see from this high, we've only got a peak. Now, we was mainly only retail back then. There was no institutions, no big time players, and the market makers were not needing to be as manipulative in order to stimulate behavior in the market. So we see here the double top, the sweep, the trap, and then the crash. Similar is happening here with a sweep, push higher to stop out these first shorts, stop out again, and even for a third time a sweep. So keep sweeping the liquidity, and these moves are large moves, almost up 10-15k moves. And then the trap is set, and then complete crash. And if you was around in the markets during these times, this was a serious, one of the biggest crashes in history, the 1010 crash of October. From this high of 2021 to the first high of 2025, 38 months. But then from this high to the actual high, there's an extra 9 months. But in total, 47 months, exactly the same as the previous cycle, high to high. So looking at the bottom end, working with the low, this low to the high, 35 months. And then the following cycle, the low made to the high, exactly 35 months again. Now, these metrics, the low to the halvening timing is 17, the same in the following cycle, exactly 17 months. Now, the halvening to the exact high is 18 months, and the same for the following cycle. So the timings are exactly the same. Now, months are large amounts of time. You know, it can be 28 days, it can be 31 days. So when we switch over to the weekly, we're going to see even more clarity. So the final thing is where are we on this monthly chart? Is from the actual high, we make a move down into the key level of the previous low. You can see this is playing out just here into the key level low. We're consolidating, so this previously monthly candle, the high here has been swept, as you can see, and we're just working it out here in this range from the previous monthly high and the previous monthly low. Both areas are of interest to us. And when we look at the previous cycle, what happened? We had a candle range, we broke up above it, but then closed within the high, and then a move directly down to the low of the actual monthly candle. Then we break, and then we break again. So it doesn't give anything away till the last second, and then it completely goes. And that is the low, literally 1-2 month candles, and then we sweep the low and we're off. So we are at this range. I've marked the high, you can see here, the same as the high, we've swept it. Now if we break above, that's good. As you can see, you've got a fair value gap here, and it's the same a fair value gap. So if we move lower into this white area, we could break lower, and that would obviously confirm the bear market. But then if we do break above it, then this kind of breaks this fractal, and we will monitor. If this does break and it is the bear market, then we could look at a low at around 60k, and this was also and this would also coincide with the previous cycle fractals of it breaking high and coming back down and retesting the high. As you can see, it retesting the 17 high of around 20k before moving higher. This would retest the previous high of around 65 to 70k before moving higher. So you can see here the same patterns in the weekly time frame. The weekly time frame will be maybe a bit different because there's different timings. So the low of the monthly candle is not exactly the same area as the weekly low. So here it's been updated. The low to the high here, 152 weeks. The next cycle, low to the high, exactly 152 weeks again. Weeks are the same duration across the board here, not like months. Different months are different lengths. So timing in weeks is more accurate. Then when we look at the low to the halvening time, 74 weeks, next cycle 75 weeks. Then we work from the halvening to the actual all-time high, confirmed, both 78 weeks exactly. When we're working with the highs, 204 weeks across the board. But when we look at the actual high to the first high, 174 to 167, there is a discrepancy there, but it's made up in the manipulation. Look, this one is 37 weeks compared to 30. So there's the double top, or in this case, a kind of divergence. And when we look at the monthly highs and the manipulation happening currently, you can see there's a bit more of a range here to work with. And when we see this high and it's just scooped it, it's an easier viewpoint to see when we break above this area and confirm something a bit more solid. Very quickly touching on gold, because gold is coming up to $5,000 per ounce now, and people are asking, what about Bitcoin? Well, as you can see, the cycles here against gold priced in Bitcoin, and we can see here this was posted in June 2024. So we're expecting a move down here, and the target is around 84%, as you can see, a move down. So when we press play and see how this has played out, this has played out very nicely, as you can see. But as we continue to play into this year, we've seen this move up here, which is major. That's gold doing what it's done. Now, as you can see, this is very heavy trajectory downwards, and this move up is pretty much nothing. Now, when we come out of this bear market that is currently playing out, we could see a serious move. So where are we at the moment? We're just waiting to see. It may be a few weeks before we see what's happening, but we can see this trend line from the divergence oscillator break, and this was going to be kind of a confirmation for me, and as that broke down, that was pretty much it. Okay, so I've just overlaid the Overwatch trend, and this is a trading bot, and this is just going to show us the performance of what I was showing you about the trend switch up, trend switch down. Now, we're on the weekly chart here. I haven't ran through pretty much all of the parameters for all of the different time frames, but I'm just going to just quickly show you for the weekly. Now, just zooming in here, we can see lots of different trades, TPs, and so on. And what I'm just going to show you is that this is just some basic entry and exit parameters. Now, the entry is on the Overwatch trend switch, as you can see. So you can see here the switch, which we was talking about in January. Switch long. Okay, so we've gone long on this candle. We've got a couple of TPs here now. These TPs are just set at set intervals. So you can see on the first interval, this trigger is set on a 10% move. So when the trade is in 10% profit, it's going to hit that first trigger. And what that's going to do is close 20% of the trade. Then TP trigger 2 is at 15% profit, and that's going to take another 20% out, and 3, 4, 5, and so on until we've got all 5, 20%, we're fully closed out. We do have an ATR trailing stop, but that really doesn't get triggered. Another thing about this is that when TP1 is hit, the trade moves into break even. Now, I don't think I have any examples I can show you, but that does work. So as this trade has moved up to hit the profit area, we've had a move down. It hasn't triggered the break even here, and we've moved, hit TP3, TP4 and TP5. We're fully closed out here. We have taken the short as this switch downwards, but then we've switched back with a small loss and we've gathered this move. So lots of different movements. Let's have a look at the performance here. So this is coming from December 2017. This is just a random date. I tried to get all 3 cycles in. So as you can see here, the profit is 526%. Quite large drawdown, but we'll have a quick look at that. 81 trades, that's pretty good. 80% profit, that's nice, and a 2.06 profit factor. Now, when we're looking at this, you can see these bars here. These bars are very informative, showing that there's a lot of profit that needs to be taken. So looking at this, for example, entered a short in August, and that's been running for nearly 6 months now. We entered at 113, but we can see here, favourable excursion, 13,000, and it's only running at 9,000 here. So we can see that pretty much each trade, it moves heavily into profit. I mean, look at this one, 13,000 favourable excursion, closed out at only 4,000. Here, 13,000 profit ends up closing at minus 4,500. 5,786 closed out at 3,002. And that's pretty much across the board here. Look at this one, 7,000 profit and ends up closing at minus $5,000. So the hard, again, 3,500 profit, close at a minus 1,800. 3.8k again, closes out at minus 4k. So you can see that every single trade is just bang on. And that's just the weekly. If I start moving down into the daily and the 4 hour, it's exactly the same. It's very, very clean. So this is just the trend. And I have another bot as well, which actually does the divergences, but I'm going to cover that in a different video because it's time to wrap up this video now. And a quick mention about this Kiyotaka charting solution with regards to this aggregated volume footprint and the aggregated order book heat map here. You can see this is aggregated, so this has got all of the different, you can see all of the different exchanges down here. So when we zoom in, you can see the deltas, or you can switch this to anything. If you know anything about footprint, then this is showing you exactly what's happening. Okay, and on most places, I used to use NinjaTrader for this, but you have to pay for this data, and also crypto, it's pretty much, you can't get hold of it. So there are a few platforms like MMT and a few different platforms that do offer this as a paid service, but this is free. Okay, and you can select whatever exchanges you want. This line here is the heat map, so this is going to show stacked orders. And when we move into the settings here for all of this, you can see all of the different exchanges that is pulling that data in, aggregating it and displaying it here on the chart. So when you want to know what's going on, actually going on, no guessing games, this is it. So guys, listen, follow my link. It's all free. You don't have to pay for any of these. Follow my link and get on there, set it all up and see what you think.
What you guys do to be able to rock a whip this nice?
Hey man, it ain't what we do, it's what we don't do. We don't drink, we don't smoke, we don't be off our time. It's not about what you do, it's about what you don't do, man. You know, you taking back steps every single day in your life, you get what I'm saying? So everybody, most people, they want to change their life, this is what they do. They want to do this, they want to add this, they want to add that. It's a removal process. Stop drinking, stop smoking, stop doing all the vices, stop skipping the gym, stop eating bad. You stop doing all those things, your life is automatically going to elevate first. Then once you get to baseline, that's when you start to add other things, but you got to get your habits right first.